Most people are still trying to save every penny in a bank account, but there's a group of individuals quietly accumulating assets that shape the future, and they're pulling further ahead. They don't invest emotionally, they invest structurally. From cybersecurity, personalized medicine, urban infrastructure, alternative education, mental health, to cultural preservation, seemingly distant fields are becoming silent wealth machines. This is a strategic map for those who want to be truly wealthy, not just in bank balances, but in mindset. Now let's break down the exact strategies they're using to own the assets of future. The mindset of owning the future. Wealthy individuals don't follow the standard rules. They don't stash their money in bank accounts hoping for a pitiful interest rate. Instead, they seek out unique investment opportunities that most people haven't even considered. They don't just invest in popular assets like stocks or real estate. They place their bets on space tech, smart infrastructure, and personalized healthcare. While others debate their streaming subscriptions, they're buying slices of the future. True wealth building doesn't come from chasing trends. It comes from forecasting what's ahead and placing capital where the world is going. The wealthy don't invest in what's hot today. They invest in what will shape tomorrow. They don't wait for clarity. They create it through vision and conviction. This isn't reckless behavior. It's a calculated strategy. The lesson is this: you don't need millions to think like the wealthy. You just need to shift from defense to offense. Stop asking what's profitable today. Start asking what will become the standard tomorrow. The wealthy don't wait for permission from the market. They redesign the market itself. And you can learn this mindset too, if you're willing to stop looking at the now and start investing in what's next. Cybersecurity, the financial firewall of the future. Today's world no longer keeps wealth in safes. The most valuable assets aren't locked in vaults, they're stored as data. Every transaction, every medical record, every account is a digital entry point for cybercrime. The wealthy understand this. They don't wait for attacks to happen. They invest in the companies standing guard on the digital front lines. This isn't just about protection. It's about securing an advantage in a world where financial value is increasingly digitized at breakneck speed. When a company suffers a cyber attack, stock prices plunge, reputations collapse, and the financial damage is devastating. Meanwhile, security firms offering solutions earn millions from a single breach. The wealthy don't just hold stock. They own digital fortresses that are fast becoming the backbone of modern economies. Every data breach doesn't erase wealth, it redirects it, from victims to those prepared. The rich are always positioned on the profitable side of that transfer. Technology is evolving with artificial intelligence and blockchain. Machine learning-based security systems now detect threats before they happen. Blockchain's decentralized design makes breaches nearly impossible. This is a booming sector where billions are being poured quietly. If the future of money is digital, then real power lies in controlling its safety. The wealthy are already securing their financial domains. The only question is whether you'll join them or get caught unprotected as this transformation accelerates. Personalized medicine. Investing in human longevity. Health was once left to chance, but not anymore. The wealthy don't leave their bodies up to fate. They invest in personalized medicine, where treatment plans are tailored to each person's genetic map. Instead of relying on generic prescriptions and hoping for the best, they choose therapies rooted in biological data, artificial intelligence, and precision science. Early adopters of this revolution aren't just living healthier lives. They're gaining biological leverage, a form of power that could prove more valuable than any asset class in the 21st century. Healthcare is evolving into a futuristic industry. AI accelerates drug discovery exponentially. Nanotechnology repairs damaged cells. Anti-aging therapies are moving from lab theory into real-world application. The wealthy aren't merely seeking longer lives. They aim to control the quality of that life by owning the technology that extends it. What once sounded like science fiction has now become a clear investment strategy. And it's reshaping how longevity is viewed, not as a dream, but as an asset. Investors are already seeing the massive upside potential. Once personalized medicine becomes mainstream, costs will skyrocket, and early investors will reap enormous gains. This isn't just a smart financial move. It's a philosophical one. I won't wait to treat illness. I'll invest in preventing it altogether. This is how the wealthy turn health into a profit-generating engine. They're not reacting to sickness. They're actively buying time. And that, perhaps, is the most powerful investment of all. Urban infrastructure, the eternal cash flow engine. Average people invest in real estate to store value. The wealthy go further. They acquire the arteries that keep a city alive. Every bridge, tunnel, power grid, and traffic signal becomes a stream of silent, recurring revenue. These aren't dead assets. They're operational engines running 24/7, printing money every time a car passes or a light turns on. This is the fundamental mindset shift. Don't invest in what's visible. Own what keeps the visible functioning. The rich don't own buildings, they own the flow of life through the city's veins. Opportunities don't lie in the skyline, they lie beneath it. Smart investors pour capital into intelligent infrastructure before the public even realizes what's changing. AI-powered traffic systems, underground logistics, autonomous charging grids. These assets generate income regardless of market mood. While others scroll property listings, the wealthy secure control over the systems that govern transportation, energy, and urban growth. These deals often come with government partnerships, multi-decade returns, and a monopoly on modernization. It doesn't stop at roads and wires. They buy land before it becomes valuable, where future tech hubs, financial districts, and entertainment zones will rise. They position early, long before demand appears. When governments need capital, they go to private investors, and those investors get access to exclusive high-yield contracts. This isn't about flipping houses, it's about reshaping cityscapes and collecting returns for decades to come. The wealthy don't just invest in places, they build the systems that make places worth investing in. Aging population, the hidden consumer boom. The global population is aging rapidly. Many see this as a healthcare crisis. Visionary investors see it as a trillion-dollar market in disguise. As millions enter retirement but still demand quality living, high-end elder services become essential. From luxury senior communities to telehealth systems, the wealthy are placing big bets on this gray wave. They don't fear aging, they capitalize on it. Those who control services for older adults aren't just making money. They're positioning themselves at the center of one of the most powerful demographic shifts of our time. They aren't funding traditional nursing homes. They're creating retirement resorts, complete with personal chefs, golf mornings, and AI-powered medical checkups in the afternoon. These experiences go beyond basic care. They offer high-quality living, and when aging populations are willing to pay more for a better life, the ones serving them profit greatly. This isn't public welfare. It's a high-end, high-growth business model built around dignity and longevity. Technology is transforming senior care. Smartwatches track vitals, smart homes detect falls, AI alerts doctors before chronic conditions worsen. Even regenerative medicine and anti-aging therapies are becoming real options. All of this is converging to turn old age into an era of active consumption. Those who invest in this ecosystem early won't just grow wealth, they'll lead the future of healthy living. Aging is not the end of demand. It's the start of a whole new market cycle. The smart money is already there. Disaster-proof investments, profiting from chaos. Most people panic when disaster strikes, but strategic investors prepare in advance. When storms destroy cities, they own the reconstruction firms. When economies crash, they buy distressed assets at massive discounts. The wealthy don't avoid chaos, they profit from it. They fund companies that prevent, respond to, and rebuild after disasters. From flood-proof housing to floating cities, they invest in solutions before problems peak. This isn't about exploiting tragedy, it's about recognizing that preparedness is profitable. And when the world turns upside down, those who planned ahead rise above the rubble stronger and richer. This isn't risk investing, it's resilience investing. After every disaster, money flows, not away, but toward those who can fix things. Governments and insurance firms pour billions into recovery. The ones who own the solutions receive that capital. The wealthy understand that volatility is inevitable. They don't fear it, they position around it. When others react, they are already placed. And when order returns, their assets haven't just survived, they've multiplied. This mindset is what separates those who endure from those who elevate. Disasters are no longer limited to floods and earthquakes. Digital threats are just as damaging. Cyber attacks now cripple economies and businesses alike. That's why cybersecurity, infrastructure defense, and rapid recovery tech are booming sectors. Wealthy investors don't flinch at unpredictability. They build portfolios that rebound fast and stay strong. To them, a crisis isn't the end, it's a financial trigger, and they're ready to pull it before anyone else sees it coming. While the world scrambles, they're already turning disaster into dividends. Alternative education. Building the new learning model. Traditional education is falling behind. While students drown in debt and degrees with little real-world value, the wealthy are shifting their investments. They're pouring capital into online platforms, AI tutors, virtual classrooms, and blockchain credentials. They understand that value no longer lies in diplomas, it lies in skills. And in a rapidly changing world, skills are the true currency of power. They're not waiting for schools to modernize. They're building an entirely new education ecosystem. Faster, cheaper, and more relevant. The classroom of the future isn't in a building. It's in your pocket, personalized and profitable. Corporations are also abandoning degree-based hiring. They want results, not resumes. That's why the wealthy invest in enterprise learning platforms, where millions of employees train in real-world skills efficiently and at scale. These systems aren't just transforming how we learn, they're redefining how we work and grow talent. This creates a new trillion-dollar education market that rewards outcome over credentials. The investors funding this transition are not just enabling change. They're profiting from every skill taught and every promotion earned. Personalization is the key. If a student excels at math but struggles with writing, AI adjusts the curriculum in real time. This leads to deeper learning and better retention. The wealthy don't see education as a sunk cost. They see it as leverage, a tool to shape the minds that will shape the future. They don't just own the platforms. They own the data, the learning paths, and the networks that distribute knowledge faster than universities ever could. They're not investing in schools. They're creating the new standard for intelligence. Mental wealth, the rise of emotionally smart investing. Mental health was once an afterthought. Today, it's one of the fastest-growing industries on the planet. The wealthy don't wait for breakdowns to seek help. They invest in therapy apps, emotional AI tools, and digital wellness platforms. The fusion of tech and mental well-being isn't just a social upgrade, it's a financial frontier. Demand is exploding, supply is scaling, and those who fund the infrastructure of emotional health are securing long-term growth. This isn't just care, it's capital. Mental wellness is no longer optional, it's investable, and the smart money knows exactly where it's flowing. New treatments like psychedelic therapy are pushing mental health into its next evolution. Substances once taboo are now being clinically validated for treating depression, PTSD, and anxiety, often faster and more effectively than traditional methods. Wealthy investors are funding this science early, before it goes mainstream. It's like getting into cannabis before legalization. The upside is immense, the risk is calculated, and when regulation catches up, those who positioned early will already control the biggest slices of the pie. It's not just about individuals. Burnout is costing companies billions. That's why businesses are paying premium prices for workplace mental wellness programs. Investors who see this trend are funding scalable platforms to meet it. Insurance is expanding to cover mental health, and billions more are expected to flow into the space. Emotional well-being is no longer a luxury. It's becoming corporate infrastructure. Those who fund its foundation will profit from every subscription, every diagnosis, and every digital breakthrough that keeps the modern mind resilient. Cultural capital, the timeless asset class. While most investors chase emerging assets, the wealthy pour capital into history. They understand that heritage is more than nostalgia, it's influence. Museums, monuments, and cultural sites, when properly preserved, become economic engines through tourism, branding, and media. Owning culture isn't just symbolic, it's strategic. Those who control history control the emotional narratives that shape consumption and prestige. It's not about collecting artifacts, it's about owning the experiences people travel the world to see and pay for. Time turns relics into revenue. and the wealthy are buying the past to profit from the future. Cultural preservation isn't just sentimental, it's highly commercial. Heritage hotels, curated tours, and luxury products inspired by tradition are billion-dollar verticals. The world's top brands are built on legacy and exclusivity. That's why the wealthy invest in heritage, not for romance, but for returns. The rarer it becomes, the more it's worth. In a disposable world, authenticity becomes priceless. And cultural assets, by their nature, cannot be replicated. They appreciate with age, prestige, and public attention. That's why this asset class quietly compounds over decades. Cultural capital defies market cycles. Its value grows with time, not with trends. As society becomes more digitized and emotionally disconnected, history offers grounding and meaning. Investors who secure cultural assets now aren't just buying buildings, they're securing emotional monopolies. As time becomes a scarce commodity, anything connected to timelessness gains financial strength. You can't duplicate the past, but you can own its impact. The wealthy understand this, and their portfolios reflect it. Brick by ancient brick. Strategic vision, playing the game on a different level. The wealthy don't follow trends. They don't obsess over daily market noise. They play the long game, where assets aren't just stores of value, they're instruments of influence. They invest in sectors others dismiss: cybersecurity, personalized medicine, infrastructure, emotional wellness, education, and cultural legacy. These are not random picks. They're an ecosystem that quietly shapes how the world operates. The rich don't just build portfolios. They architect the systems that govern value creation itself. While others diversify for safety, they consolidate for control. What do all these assets have in common? Longevity, limited replicability, and future relevance. The wealthy don't ask, what's trending this month? They ask, what will the world look like 10 or 20 years from now? Then they place strategic bets early, while most people are still skeptical. When the mainstream catches on, their positions have already matured. This isn't speculation, it's positioning. And it's the key to staying ahead, not by reacting, but by shaping what's to come. That's how wealth becomes power. So what game are you playing? If you're chasing quick wins, you'll always be reacting. But if you adopt a long-term strategic lens, you change how you see money, assets, and opportunity. Investing becomes more than finance, it becomes foresight. And those who think like architects, not gamblers, end up owning the blueprint of tomorrow. When you hold the right assets, you don't just accumulate wealth, you influence direction. That is the real endgame of financial mastery. And the wealthiest already know they're not playing to participate, they're playing to define the rules. The wealthy aren't chasing assets, they're owning the future. They don't invest for short-term gains. They invest to control the rising flows of value: data, medicine, infrastructure, emotion, education, and legacy. Every asset they choose reveals one truth: power belongs to those who bet on what's next, not what's now. If you're merely saving, you're being left behind. But if you dare to look ahead and act early, you won't just change your finances, you'll reshape your future. True wealth isn't found in numbers. It's built in decisions, in vision, and in the courage to invest before the crowd even looks.